Yes, so we have I think 500 people online, which is quite impressive. My name is Philippe Redaelli. I'm introducing myself very briefly. I've been working since the early 2000s in the financial markets. I was the General Secretary of regulated exchanges, including belonging to Gruppe Deutsche Börse, in emerging commodities. So I have a long experience about new products that the industry knows they're needed, but nobody else understands. And then I joined the space in 2018. Today I am with Kaiko. Kaiko is let me briefly introduce the company, what we do, and maybe the topic of the data. And then I will jump to the topic of this talk, which I couldn't find a broader one. I'm quite happy about it. So Kaiko is a leading data provider in the digital assets industry. What is the business? Digital assets, DLT, blockchain, it's all data-driven, right? Automaticity, programmability depends on data. We say garbage in, garbage out. So having good quality data is a key factor for the development of our industry. And this is what Kaiko addresses. Kaiko was founded in 2014, and we have a different number of data solutions ranging from raw data from the blockchain, on which you can build analytics and rates and indices. We also do some research. Let me give you an example. This is the imbalance of Tether. When Tether depegged this summer, I guess everyone in the room sees what Tether is. With this simplistic data products that we have, we could see or can monitor the pegging of a stable coin, for instance. So this is for Tether. It could be of any stable coin, asset-backed, for instance. So data is a way to monitor digital assets. It's not only about technique, it's not only about ecosystem, it's also about operations, and for that you need actionable, reliable data. The proof, I would say, about this is the client basis of Kaiko. So we are a B2B company. Our clients belong to the world of research and supervision. So we couldn't put the logos on the screen, but the major US and EU regulators are clients because they need proper data to perform their supervisory tasks. Same for research and academics. On the right side, issuers of products, they need data. Buy side and sell side, market participants. So as soon as you got a digital assets on the blockchain, well, it's for that digital asset to be exchanged from a buyer to a seller, right? So buyers and sellers, they need proper data. And of course, venues and infrastructures, they also need proper data. So how does it work? Data on the blockchain is not exclusively about blockchain or DLT. It's an ETL job, extract, transform, and load. Someone has to be around, have your own nodes like we have, extract data from the blockchain, also be connected to centralized marketplaces, because most of the data is relevant only when mingled with centralized data. We extract it, then we fabricate data sets that are usable and compliant. Usable means that they're standardized, irrespective of the data source. They're presented to the consumers of the data in the same way so that they can be used and integrated in their processes. They're also compliant. For instance, if you do a benchmark, well, in the financial industry, you have to have a license for that. So Kaiko has that. And then it's about the last mile. Data needs to be brought to the users. So we can't just build an infrastructure and be isolated. So the distribution part on the right matters very much. And this is not only about blockchain. Of course, we can inject data on the blockchain as an oracle, but we are in the main distribution channels in the financial industry. And this presence leads us, so now I've made my point, you know what Kaiko does. Why digital assets, what's next? So the first message, the first question I was asking myself is, what kind of message can we bring to open a second day of a conference like the CAC conference? First, I called it digital assets, to launch maybe a debate. Do we have to keep digital assets versus crypto assets? It's in the title. Anyone interested in debating this, please join us on our booth. But aren't all assets on the blockchain just digital assets? And that leads to my first question. Digital assets, what's next? I'm not obviously giving predictions, but considerations based on our discussions with the market. What we observe when we talk to the market participants is a shift from disrupting to business models. This is why I call the speech digital assets and not cryptos. It's not anymore about disrupting an industry rather than answering a business question. Disruption comes from the fact that the proponents of the new solutions identify new business models that the concerned industries themselves don't realize they're going to shift into, and hence the word disruption. But discussions show also that we cannot hide the fact that the blockchain has been around for almost 15 years, that a game-changing technology hasn't happened yet, and that some words are becoming counterproductive. We are living in a post-FTX era and a post-NFT bubble era. So if, when we observe market participants, for instance, working on NFTs, they don't talk anymore about disrupting any market because it's been proven wrong. They're going to look for the benefits of the users in real life, not only in theory or in the long-term future, but in real life now focusing on pains and how digital assets can solve that. And we can observe that the successful DLT-based operations at the moment, I'm more familiar with the financial markets, so I'm going to refer to that. If you look at the DLR Broadbridge swap system, for instance, or the JP Morgan one, well, they've been proposed to the industry by market participants themselves, and they're very much focusing on the operations of swapping financial instruments using DLT rather than DLT disrupting the swapping market. And that's a slight difference. Disruption is, there's a good idea, but we discard a number of factors, and we think that with a, I would say, focused attention, we can disrupt a whole industry. This is not true. The DLT is proposing an improvement. I even hesitated to call this first line from disruption to incremental innovation, but the debate is open. Isn't there a space in the few months to come for a more incremental-minded mindset rather than disruption? The second consideration is from regulation to contracts. The train has left the station also in regulatory terms and legal terms. Everyone now feels, even in the crypto world, even if intuitively that code is code and law is law, so the Web3 will not escape the legal system. The main aspects of digital assets are being addressed, and for some of them already almost solved. So we are in a world of not yet certainty, but enough certainty to move from wondering whether it's feasible into making it happen contractually. Let me give you a few more specific elements. Is a digital asset a property? What is the law applicable to it? What are the rules applicable to the transfer of digital assets? Well, there are international treaties being worked at the moment with enough content to be there for lawyers to contractually move on towards solutions. So one of the considerations I'm submitting you is it still worth claiming that regulatory certainty is not there? Or is it the time to distinguish between what is heavily regulated, and then, of course, one must be careful, and what belongs to the commerce? And today, when we talk about the industry, digital assets in the industry, it's about commerce, right? So contracts can solve a lot. So what we observe a lot of time is being sort of wasted in global considerations about regulation, and less time is being dedicated on contracts. Again, I'm from financial markets, so a few years ago, ISDA, which is the main trade association in financial markets, issued a series of papers on the smart contract and how you can link it to the legal system. Who used it? Almost nobody. Whereas there are standard contracts in the financial markets, and it's much easier to take those smart contracts to standard contracts, and then amend them to include transfers done on the DLT, rather than build something on a DLT and explain the whole financial world. They have to shift into a new way of doing business. That was just an example. And that leads me to ecosystems. So a common narrative in the innovation, especially in platform businesses like the Web3, is ecosystem. We need to build an ecosystem. We're observing that what's missing is not so much lots of initiatives everywhere that solve one pain point. It's standardization. Standardization is often perceived as issuing a standard and hoping everyone will use that standard. Well, is that the right, way of seeing things regarding standardization? In the non-digital or non-Web3 world, there are different standards. The question is the interoperability between those standards. The example or the metaphor I'm using very often on standards is, take the identifier question. Okay, you cannot exchange a digital asset if it doesn't have an identifier and everyone needs to use the same. Well, is it true? As a person, I have my passport with an identifier that is issued by the state, and as with my accent, it's the French state. But I have a social security number issued by the social security office. I also have an employee number issued by my employer. What I mean is that the identifier is a contextualized standard, purpose-based in an environment. So if we are waiting for someone or some standard to emerge and then be taken over by everyone, it won't happen. What will happen are dictionaries, like my standard. According to my standard, my number is the same as my number in another standard. When we do this, then interoperability can start to happen, because we need also, I think, or I submit this to your consideration for the day, to start shifting from innovation to integration. So everyone innovates. We've been innovating for years. The question is, why is it not being used? So a few elements were outlined yesterday, including, okay, like ChatGPT, nobody knew about it a year ago. Everybody is hiding to use it for personal or professional use in just a year. But it's a technology that is easily graspable. Don't know if it exists. Whereas the blockchain and the DLT is more a ground platform thing. So the comparison was, okay, you have to relate it to the web and the emergence of the cell phone, and then the smartphone is longer. Yes, but the mindset also matters. Let me take an example. I was watching Chainlink's CEO keynote a few days ago, and he said, it's interesting to look at the evolution of Chainlink. They shifted from a Web3 oracle, purely crypto native thing, into a blockchain infrastructure doing interoperability. And he was saying, I'm working now with Swift and major financial institutions, and the reason why is the signature that is needed to certify that a digital asset is a digital asset. We don't have to invent it and then tell the financial world, take ours. The financial industry already has signatures. It's easier to bring them on chain rather than inventing something that on the paper is fine and then it doesn't work. So chaining is just an example of, it's now about integrating our proposals, our DLT proposal, into legacy systems so that from business models that are implemented through contracts, that themselves are implemented through standards, they go into real life through integration. And this is how we will shift from cryptos to all assets. And this is why I called my talk Digital Assets. Because honestly, our experience is that if we use the word crypto, we risk to stay in a limited environment, claiming that we can change the world, but perceived as, at best, idealists, at worst, people who don't know their business. Why? Because when a technological solution is there as an enabler in any vertical, nobody can transform itself into a specialist of the vertical. So there's an automatic narrowing of the landscape that we're analyzing and a narrowing of the solution that we're bringing. So let's shift to digital assets. Let's think business model, contracts, standards, integration, and then we can start talking to the people who do business for years and ask them, well, now you know the blockchain. The time has gone where you didn't know at all what was possible. You even have examples. I'm finishing with DeFi. We just mentioned DeFi as an industry where only individuals went and brought liquidity, and therefore, yes, but look at BIS and Banque de France and the Swiss National Bank and MAS from Singapore. They have used a DeFi protocol to simulate the exchange of central bank money, and it works. They've copy-paste the code of Curve in this example, and it just does work. So the promise of the blockchain is there and is demonstrated. The time is finished when we have to claim that there's a promise. We just have to refer to existing functioning DLTs. I mentioned the JP Morgan one, for instance. Well, if you look at there, people were using ages to swap, and now they can swap atomically in a few seconds, and billions are traded every day. So let's not claim that we disrupt. Let's use proven examples and talk to our customers, talk to our prospects, to study with them how they can benefit from the outcome of the DLT that others already benefit from. Thank you.